Hey traders, I haven't done one of these for a while. I'm going to try to see what I can do here for you guys. Let me make sure the audio's up where it's supposed to be here. There you go. At any rate, I am looking for some two main themes on this earnings season to see how they play out and how price reacts with current things that have developed over the past quarter and how that's going to impact earnings. First of all, I'm looking the high 5% yields for the safe alternative in CDs, how that is going to impact the high PE stocks. That's one of the main themes that I am looking for, and thinking that the high PE stocks will be detrimented by the safe 5% yields on the CDs, because all of a sudden you have to get a much higher multiple to justify the risk in those expensive assets. Okay. Secondly, the unusual warm weather we've had. I mean, heck, I was out in shorts today. You know, here it is, end of April. I've been out in shorts several times. Uh, all around my house has been planted. We're setting up for a bumper crop year. Okay, so for you guys who are in the cities, don't know what that is, that means the weather was well enough early in the season they could plant early. Now all we got to see is if we get continued rain and good weather, and by mid to late July, they will be harvesting and planting a second crop. This is very good for food prices if that can happen. We typically only see that once every 20 years to get a successful bumper crop year, and we might actually be getting that this year. So be mindful of that. That could drive down food prices, uh, into the summer season if the weather cooperates and we continue here. And I'm in the Midwest, and if the weather continues to cooperate for the growing season. So what you want to see now is early humid weather. Uh, Now that everything's planted, the earlier we can get that humid weather, the faster the growing season will explode. So we'll see if we can get that scenario going forward here in the Midwest. So on the CD yields here, so what I would do go first here, go over here to the scan tool here in Thinkorswim. And so basically, I'm looking for all companies that have a market cap over 100 million, which there's a bunch of them there. So we got 85 on the list, all of them with weekly expiration. Okay, and then high PEs. I'm looking for something with high PEs. If you do that scan right here, and Tesla currently isn't on this, but it was on it before earnings. It's currently dropped off the list since the earnings report, but Tesla's still up there. So just keep that one on mind as well. So these names right here are the ones, in my opinion, are at high risk of repricing because of their priced earnings multiples, versus the you can pretty much get 5% or better yields now, uh, anywhere. If you just shop around a little bit, that's a safe alternative. Why would you risk your money with really high expensive stocks? If you can have the alternative to park that money, take your money out of these expensive stocks, put them in CDs. $1 million, you're uh, you know, a couple $1 million you cash out on, easily $100,000 a year just in interest, and you do nothing. Okay, and it's secure. So, um, just keep that in mind going forward here. Like I think it takes 2 million to make 100,000, something like that. Is that right? I have to do the math. Can't remember off the top of my head. I just spitballing it real quick here. So be mindful tomorrow morning. Lilly is the next one on my list. I was bearish Tesla going into the numbers. The money flows were bearish, and it's got the high PE. It played. It was confirming my thesis. Okay, Lilly's reporting tomorrow. We have all this talk about trying to figure out ways to slash the budget. I think the number one place that they are going to look at first and foremost is healthcare to slash budgeting. Okay, so be mindful of that, guys. We've got COVID behind us. If they're going to slash the budget, they're not going to take it away from the war effort. Not with this administration, but yeah, there could be some really bad guidance coming out of these, and we have Merck reporting tomorrow too. So be mindful of that. Okay, going into your trading here. Okay. So now let me go over here. Try not to. Oh yeah. Okay. The second theme is the e-commerce theme. So we have tomorrow evening Amazon reporting, and so basically what we saw even yesterday. The stock didn't react very well, but McDonald's came out, really good earnings. People are out. They're out shopping. They're out driving around. They're out enjoying the springtime weather. This is one of the best springs we've had in the Midwest in many years. So they're out shopping instead of being huddled up, with the furnace going full blast and everybody having to worry about paying utility bills and having to hunker down and do their purchases online. It's completely opposite this year. And what's happened, we went into to start Q2 with a certain expectation from these businesses that, the e-commerce side was going to be fairly yeah, at a certain level because the weather was bad. And we didn't get that. Instead, the brick and mortar got a lot of business. So like McDonald's or McDonald's, like the restaurants, we saw it with CMG this morning or last night. Last night, I think, just blew it out of the water. CMG, and that's because people are out spending money because they want to get out. They've been boxed up for years. They want to do everything in their power to get out of the house, and that's why I think it's going to be bad for Amazon. And Amazon could have went and slashed a lot of their costs. They got a significant variable workforce, which they could have gotten rid of most, or if not all, that to help the bottom line and stuff. And they might come out with like Google did and do a share buyback to bolster up their shares. And in that conversation, when you have an alternative of a 5% safe yield just to park your money for 5%, it was, in my opinion, far more advantageous for Google to actually put their money into safe security to maintain their liquidity than to actually take their cash reserves to buy back those shares. So, we are rapidly approaching a phase in the economy where the buybacks do not it does not justify to do the buybacks versus the alternatives. Okay, and today, Google, even with the announcement of the buyback, people weren't buying into it because smart money realizes that, just because you're having a buyback, is that really the best use of your money? Because it's, and I think Google is actually going to get punished over that. So be mindful on that. We'll see. Maybe Google starts to take off here, but I think that was a bad decision, and we might actually see the same decision out of Amazon. Okay. Real quick, like some charts I want to go to because I'm sitting there rambling real bad. Where there? Okay, real quick here. Some things I'm looking at here, right? Got real quick here, and if I can get this to pop up. Ah, damn it! Now it's not wanting to pop up. Do do do. Well, shoot, don't know how much I lost there. So we got the quarterly CPR low here. These are arithmetic uh, indicators for CPR, central pivot range, of that the quarter of the month of where price should be aggregating in a normalized bid-ask scenario. Whenever you start pushing outside of these ranges, which we're below those ranges right now, it is indicating uh, the markets are nervous and that they are shopping for uh, a lower or higher. You're starting to trend into a lower or higher environment. Okay, so we have 4 days left in, 4 or 5 days left in the trading week or in trading month. So what we want to see on this to say we aren't just, we are starting a new breakdown trend in the markets is to see this thing come back up inside of these very critical support zones. Okay, so we definitely want to keep that on watch on that. That's why I really wanted to show you guys that going forward here. Oh, yeah. Oh. Now, if I enlarge this one right here, I got a lot of little things here I can show you about today's action real quick. Uh, so, uh, this one right here represents last week's, no, wait, so last week's trading range. So 100, that was the last week's high, last week's low, and we actually hit 2 standard deviation low today off versus last week's trading range, and we started bouncing into that in that zone. That's one takeaway right there. Okay, over here, this is a Head and Shoulders Fibonacci uh, an, uh, extension. Okay, and so I'm thinking that this could be a Head and Shoulders pattern right here. So we have to be mindful of that. This was potentially the neckline up here, and we are starting to break the neckline, break down from the neckline. So if that's the case, typically a Head and Shoulders breakdown, you're looking for 100% of the move breakdown. If that's the case, I have a wedging pattern. You see this wedge, this right here, and this. There is a wedging formation, okay? This is the high, this is the low. We're inside of that wedging formation. The low of this wedge matches up with the expected move of the Head and Shoulders breakdown. That would put us that right here down here at 4,000. Okay, so that's the bearish case to finish out a Head and Shoulders breakdown scenario. Okay, uh, another thing. Okay, uh, on the how am I going to say this? Two little takeaways here I want to take right here. So on this scenario also, you would be looking for the 382 to 50%, somewhere in this range here, to be a potential swing low. We have not completed that. So the highest odds probability, you're going to come down into this blue zone, okay? And this blue zone, actually, if you draw a second channel over here, anchor it here, and then you anchor it here, okay? That would put us down inside of this probability for the end of the week. So, just definitely keep that in mind. And if you use pivot points, that puts us right into our quarterly pivot and our monthly pivot zones. Okay. Pivots are different. They're calculated differently than CPRs. Okay. So, CPRs are already broken. Okay. So if you're a pivot point, somebody following pivot points, this would put us into major support on a quarterly and monthly time frame down here. Okay. So that suggests that this move has still early and not quite played out its course yet. Now, if I want to, one last takeaway here, you notice we came down. This is yesterday's lows. Okay. If you anchor off of today's highs on the ESs, and anchor to 50% off of yesterday's lows, you notice how we bounced right here at the 0%. Okay. This can indicate a bottoming process. So you want to be mindful of that. The fact, 50% right here, high to low. And when we did put the hour on the hour time frame here, when we did do that, we got a possible doji reversal candle on our hourly time frame. So we do have some indications there that we might have bottomed. So be mindful of that, okay, going forward in your trading. Ideally, we are looking for down here inside my blue area, which we have not achieved yet. So that's just a few things I really wanted to share with you guys going forward here. I was bullish for Meta. I'm actually, I knew the money flows were really strong going into earnings, for the past few weeks for Meta, and everything that seems to have strong money flows into this quarter so far are getting bid up, like Microsoft. Okay, the things that had weak money flows are getting decimated, and like I said, Tesla was on my high PE scan. The money flows were weak coming into the earnings, and we didn't even attempt to save the support on Tesla when the earnings came out. Okay. So, and Amazon tomorrow, not the greatest money flows for the quarter. So we're coming into this, so be mindful of that. Amazon, not looking great. Possibly doing a Tesla scenario here on Amazon. So definitely keep that in the back of your mind. Google was the same way. Money flows were really weak. We really didn't go anywhere today. Okay. Definitely keep that in mind. The big one tomorrow morning, Lilly. So, Lilly, money flows so, the past few weeks on Lilly. Very expensive stock. So, I want to see if my theory is right. These high PE names are in a lot of jeopardy for this quarter. Okay. Nvidia is on that list too. So definitely keep that one on watch. Nvidia is one of those high PE stocks. And as these high PE stocks unfold, and if more of them start breaking down, those others, the algos are going to catch on what's going on, and they're going to start dumping early. So say let me come in tomorrow, Lilly is dumping. I would not want to take NVIDIA to the long side tomorrow if that were the case. So, just food for thought, thinking forward into our trading. Okay. Well, thanks for listening a lot. Please leave some comments below on YouTube. There's the comments below. Like the video if you like it, if you please. And, please let people know about my videos and stuff. I appreciate everybody watching and stuff like that. I'll try to do more of these, and I'm going to play with this new Snagit I got. So, thanks a lot.